please let me introduce Rashad Cassim, Deputy Governor of the South African Reserve Bank, Peter Gallagher, the Reserve Bank of Australia's Chief Representative in London, Lewis Leo, Chief AI Officer, Co-founder and CEO of Twin One AI, Hatice Karahan, Deputy Governor of the Central Bank of the Republic of Turkey, and moderating the panel is Hyun Shin. Hyun Shin is the Economic Advisor and Head of the Monetary and Economic Department at the BIS. He's a former professor at Princeton, Oxford, and the LSE, and useful context for this event at least, he's played a key role, and that's understating it, in shaping the BIS agenda on digital innovation, and he co-led the launch of the BIS Innovation Hub in 2019, serving as its interim head. So, Hyun, the floor is yours.
Thank you very much, Henry, and thanks for the rather forbidding introduction. It's very kind. I am Hyun Shin. I lead the economics work here at the BIS, and AI is very much part of our economics portfolio. And I'll say a little bit more about the BIS shortly. But we've got a terrific panel to follow up on Pablo's, I think, very good overview of both the use cases and the challenges that face central banks as they look to using AI. We dealt with this in our annual economic report a couple of years ago. Actually, it was last year. But things are so moving so fast, it seems longer ago than that. And maybe I can come back to this. But let me introduce the panel. I think this is a very, very well qualified panel to follow Pablo's remarks. Peter Gallagher, he's the chief representative for the Reserve Bank of Australia. He's based in London, but we see him during the bi-monthly meetings. He's an economist by training, but he's been in financial markets, and he spent a long time in the payments area. So he's very familiar with both the technology and all the policy issues, especially around data governance and the inference problems. And Rashad Cassim, very old friend of the BIS. He's been through all the key areas in the South African Reserve Bank. He's the deputy governor, among other things, in charge of the international area. And in that context, he is leading the G20 presidency from the central banking side as the president of holding the presidency of the G20 this year. And needless to say, AI is occupying a very key role in the agenda of the G20. And Lewis Liu, very welcome to this event. He's the odd one out because he's not a central banker, but has tremendous insights from the private sector. And you'll see that many of the issues that he's going to be raising are of first-order importance. And last but not least, Hatice Karahan, Deputy Governor of the Central Bank of Turkey. We see her, of course, at the bi-monthlies. Again, she has a very, very broad background in terms of the economics, but in particular in this area on data and AI. Now, in the annual economic report chapter that we published last year, what we noted was, actually, if you lift the bonnet and just and look into these models, how they work is essentially matrix algebra. So they're very good at imposing structure on unstructured data. And the transform architecture, which is the basis of the large language models, it's basically trying to impose some structure on words. And depending on where the word appears, in which context, it's actually a different vector in the mathematical space. So the word bond could be close to fixed income security in some uses, or it could be family ties in other contexts, or it could be martini if it's James Bond. So it's a very, very different way of actually imposing structure. And just as guessing the next word in a sentence is a task that is performed very well by these models, forecasting actually and nowcasting also turns out to be an extremely good field for the application. So just like guessing the next word in a given context is very amenable to LLMs. Guessing the next realization of a statistical series within the context of what else is going on in the economy also turns out to be something that's very amenable. And that's saying pattern recognition is very important in the case of anti-money laundering and the know your customer type of safeguards as well. But having said all of this, of course, there are big challenges. And in particular, how much can we really ensure privacy of data? And as Pablo mentioned, how can we really ensure explainability? Do we really know how these things work? To some extent, you don't care, but that's a very different approach from the way that economists normally approach a problem. So when it's a problem of forecasting, we do want to conduct some inference as well as simply trying to guess correctly the next realization. And inference really is about the structure of the model. And I guess with privacy in particular and cyber risk, I think there is a very, very big set of questions on how much can we really rely on the privacy-preserving techniques that are out there. Because we know that there are ways of getting around some of these cryptographic techniques, and cyber criminals are very adept at jailbreaks and other tools. So there may be some additional layers of safeguards that we may have to impose. So let me start with a question for the panel, which is about the use cases, and in particular, how AI is used in their central bank. And in the case of Lewis, I will ask you a slightly related question. And the RBA is, of course, not only is it a very, a very far-sighted and leading central bank in this area. You may have seen that Michelle Bullock was appointed as the chair of the Irving Fisher Committee, and that happened over the weekend. And in that context, she'll be really leading a lot of the cooperative activities in this area. And needless to say, Peter's going to be a key support for those activities as well. So let me turn to you first, Peter, and ask you what kind of use cases that is already happening at the RBA. What do you envisage, and what is your vision in this area?
Thanks, Hyun. We've seen AI become pervasive throughout the financial sector over the past few years. We wrote about this in our financial stability review about a year ago, and since then we've just continued to see rollout and more broad usage. And the use of AI is really quite pervasive and becoming quite fundamental to the way that the financial sector operates these days. It's really important in order to make sure that operational efficiency is kept up to speed. Risk management practices now are starting to rely on it. We know that banks rely on reg tech technologies to help them with their regulation and supervision requirements. And for customers, we can always see that personalised services are becoming more AI generated. We're seeing faster transactions, more accurate transactions, and of course the fraud controls that we're seeing run out are very important as well. And the more common applications that we see are in things like credit applications and loan applications. We see trade execution increasingly rely on real-time data coming in, put against historical patterns. We're also seeing AML, as you've mentioned, become standard practice to do pattern recognition and try to identify where there are frauds coming. In the RBA, most of our focus has been on improving our internal operational efficiency. And what we've done in particular is tried to look at carefully how we can use our own internal data and apply some of these techniques to what we do internally. So we've developed a range of targeted internal chatbots. And one of the chatbots we have is our analytical chatbot. We use it so that analysts can ask policy relevant questions of our full history of internal analytical work that we have published internally but not published externally. So they can use that to understand how others before them have addressed various analytical questions that they have to tackle and make sure they're not reinventing the wheel. We've got a corporate policy chatbot so that people, particularly as you get new staff come into the institution, there are a whole range of rules and regulations that they have to follow, and this assists them in being able to navigate their way through the rules of the institution. We've also got a communications chatbot, and the staff use that to help them with drafting things like emails, to use letter templates and other sort of templates that we have developed so that we get a standardised corporate feel to the way that we produce our documents. And we also have a project management tool. For those of you who've had to do a project, there are endless forms and processes you have to go through. So the chatbot helps people with rolling that out as well. As well as that, we've got a business liaison tool, which we've published a paper about it only a couple of weeks ago. Like many central banks, we go out and we speak to individual firms, and we've got a build-up of information notes, 23 years worth of information, where we've captured the interview information. This tool enables us to really start to draw out for the first time some of the tone in the conversation, some of the uncertainties that we've seen in the conversation, and some of the trends that build up over time. And so it's been really helpful to give us a much fuller sense of that qualitative data that we've captured over the years. As well as that, of course, like many of you, we use AI for coding support. We have IT developers, but we also have a big team of business coders, and they use languages like R to interrogate the data, to draw their graphs and do their statistical analysis. So this is used to help them write the code, help them debug the code, help them test the code and make sure that's all strong. And finally, we also have a tool which uses machine learning to ingest the vast amounts of archive information that we have in the bank. We're a relatively young institution compared to many here. We've got 200 years worth of information which sits on shelves, and in fact there's nearly 5 kilometres worth of hard copy sitting on shelves, and the machines ingest this, and they can even read most of the handwriting, although I'm sure some of the handwriting is quite challenging, but they ingest it, and we can now start to interrogate it, and we're publishing it on our website, so that's very good. Obviously, all of our analysts are also using AI in their analytical work, and they're looking very carefully, trying to draw inferences from the information that's out in the public domain. We're a little bit cautious on how we're actually applying that and putting that into production. We've got very carefully protected areas where analysts can go and do their experiments. But we're very conscious that when it comes to sensitive areas such as policy and financial oversight, we have to be careful. Developing those models is very resource intensive, and there's quite a shortage of well-maintained, broad, reliable data sets that we can actually use to train the models. So we're treading carefully in that area, and most of our focus in production is on the efficiency side.
Very good. Thank you, Peter. Rashad, can I turn to you and ask you the same question?
Yeah. So I'm going to twist your question a bit, because I don't think I can match Peter in use cases. We have some interesting use cases, like, for example, imagery of construction trucks to kind of assess GDP growth and so on. I guess I do want to kind of ask a more basic question, and that is that what is the dilemma of a central bank who's sitting there thinking about strategy and has to confront the issue of AI? And I think that, in the SARB, like everything else, it is totally wrong to compare AI to fintech and CBDC. It's a different level scale and so on. But one of the big things we're worried about is the cost of inaction, right? What is the price you pay for inaction? And in so doing, I think that cost for inaction was greater when you worry about what it means to the macro financial system than what you worry about how you can use it in your operations as an organization. And I think that has been our dilemma in terms of how we're framing the AI issue. Now, I guess another facet to a central bank is that at one level you're a normal, complex corporate institution. You have staff, whether you are sitting in IT, whether you're sitting in HR. There's an NBR study from 2 Stanford professors who argues that there's some staff in a central bank who would find AI an augmentation to their work. Others would be threatened by it. So at one level, there's your challenges are no different to a usual corporation. But at another level, you are a public institution. You're a public good institution, and there you have the big challenge of regulation, of defending the financial system. Now, I think that's where. So in our case, there are 2 sides. The one is that we have use cases, and the use cases, if you read a lot of reports, are pretty similar. They're in the area of nowcasting, they're in the area of communication, in the area of payments, and so on. I think that the question that we as central banks have to focus on is how good are our financial stability vehicles of financial stability committees in really taking on board the challenge of AI. And I kind of like, I like the paradigm. Some of you may disagree with of John Danielson, the LSE professor's work a lot. Basically says the dilemma at the macro level that central banks face is that is the defender's dilemma. The attackers, only need to find a single vulnerability, whereas the defenders the central bank in some respects and the financial regulation have to monitor, the entire system. So I'm throwing out the problem rather than giving you an eloquent set of use cases. But in their end, we are in determining the use cases. There are other issues, budgets, competing budgets. Because you don't see the immediate benefits of AI, there's resistance to it. So how do you kind of do this? In the SARB, the first thing we did is the first building block to AI is establish an AI policy framework, which I think many central banks have done some quick chat GTP search while we were listening to the general manager's very interesting speech. And one of the things that is clear to me is that once you set, the framework, the ethics, the budget must be of determined value, you then get into a series of interesting use cases. But let me leave it there. Thank you.
Thank you very much, Rashad. I think you've laid out the issues very well. So, Luis, I'm going to skip you and go to the central bankers first, actually, if I may, but we'll come back to you shortly. So, Hatice, it's really the same question to you. I think, CBRT is really analytically very, very strong. And I know that there are lots of use cases there. So give us a sense of what's going on.
Sure, thank you, Hyun. So central banking is a complex system, much like the human body, and to keep the system resilient, supporting the vital functions highly matters. So, what are those? I have a simple framework based on 3 pillars, which has a memory-friendly setup. So, in this framework, the first one is mind, and I use the mind metaphor for macroeconomic insights and data. In other words, deriving deep economic understanding with enriched data. The second pillar of the framework is pulse, and pulse is all about payments, unusual leaks, and security, because it's very important to monitor the heartbeat of payment systems. And the third pillar is CORE, and CORE stands for coordination and efficiency, the operational backbone for a central bank for ensuring smooth, reliable, and efficient internal operations. And at the CBRT, we take advantage of various fields of artificial intelligence to strengthen these pillars. And let me give some specific examples now. As Rashad mentioned, most use cases sound similar, but I guess it's still good to share them because we inspire each other when we hear about them. So to start with the mind pillar, we are really excited about integrating the complex algorithms of artificial intelligence into our analyses. And one related work here is for the measurement of firms' credit risks. By using an extensive data sets, our researchers have applied sophisticated machine learning algorithms to predict which loans might default. And they obtained better results, better outcomes, predictions compared to those produced by traditional models. We also make use of AI in selecting the best models that will deliver the optimal choice among a very diverse set of competing models, right? And one good example is the models for nowcasting GDP that our research department has developed over the years. And one example for data, we have an exciting initiative that will build upon another exciting initiative. So first, let me tell you the underlying one. On a daily basis, we collect for 30,000 European article numbers, EANs, from like 20,000 grocery stores nationwide. And this is quite big data. But how to use it effectively, right? We took this big data and processed it through machine learning and to match each EAN with a COICOP code. And voila, we generated a food price index that lets us track food inflation day by day based on this specific index. Now let me continue with the second pillar after mind, pulse. We need to monitor the pulse to ensure a steady, stable flow in the system, and therefore integrating AI into the oversight of payments is a great opportunity to achieve real-time monitoring. And one key project we have in this area focuses on potential anomalies within our instant payment system FAST, which currently processes roughly 15 million messages per day. And here we are developing advanced tools to detect unusual transactions and transaction patterns that conventional monitoring systems may not capture. And lastly, the third pillar, core. Institutional coordination and efficiency can now be, those needs can now be successfully addressed by AI, as mentioned before. And we have various projects in this area, but for the sake of time, I'm going to mention only one. The project called Central Assistant, which is a generative AI-powered assistant designed with data privacy protection. It offers our staff a range of capabilities, including text processing and document summarization, along with some customized tasks. And with the core initiatives, we aim to receive two big benefits: saving resources and raising the quality of our outputs. By the way, these three pillars are not mutually exclusive. All of them are crucial for driving innovation and efficiency together. Thank you.
Thank you very much, Hatice. I think this way of classifying and organizing the work, I think, is really quite inspiring. And I guess with core, this is something that applies to institutions more generally. But I think your first two on data use and on the oversight of the payment system, this is very much a public policy task, very much in the domain of central banks. So Luis, you're the co-founder and CEO of Twin AI,
Yeah.
Twin One AI, and also the CEO of Eigen Technologies, very much in the financial sphere. Why don't you start with some introduction of what what you're doing, and then I think we can put the discussion into a broader context.
Of course, thank you. Yeah, so I think I want to talk a little bit about Eigen, which I was acquired last year, but it really was, we talk a lot about one of the fundamental uses of AI around sort of data collection for central banks. We were at one of the very first players in the private sector. So Eigen was a little bit early. We were very early in the AI space. It was founded almost 10 years ago. We were extracting data and transforming financial documents, so these are loan documents, derivatives contracts, into structured usable data. Now, if you think about it, a loan contract, a credit agreement, or an ISDA, or whatever, a CLO, at the end of the day, these are human languages that oftentimes need to be mapped onto some kind of data structure to perform some kind of operation. So the first client Eigen ever had was Goldman Sachs. Actually, it was pretty amazing to have as a first client. And we helped Goldman comply with Dodd-Frank. So following the financial crisis, Dodd-Frank came about. And one of the specific parts of Dodd-Frank is QFC, Qualified Financial Contracts. It required every major American bank to basically report on a 24-hour basis, first the back book of all these financial contracts, and then on an ongoing basis, on a 24-hour basis, certain legal sort of positions in the contracts, right? So things like cross default, things like credit support providers, eligible collateral. These information allowed the Federal Reserve and FDIC to predict what happens if there's something wrong with a bank, like a default here. How does it impact the rest of the system? So this was the core of a part of Dodd-Frank. And during this time, this was back in 2016, 2017, most of the banks would hire an army of lawyers, spend $200, $300 million to collect this piece of information. Goldman Sachs decided, AI has arrived, probably 10 years earlier than it did. And we were basically the first AI vendor to ever receive regulatory approval to basically process these contracts on a straight-through processing basis. So it involved, at the end, once we were in production, 92% of all the answers we answered for Goldman, which the data got sent directly to the Federal Reserve and the FDIC, required no human intervention whatsoever. So but we were a little bit early. I think Goldman was very advanced in his thinking at the time in helping them comply with Dodd-Frank. I think a couple years later, LIBOR came about. LIBOR, as many of you remember, was a very painful process, $400 trillion worth of exposures. And what was really interesting about LIBOR is I think that was a crucial moment where some of the banks went from, we're not going to trust AI to review our contracts, to there's such a huge volume of contracts that need to be reviewed, we're going to try AI. I think LIBOR was almost a coming out moment for natural language processing, which is now generative AI, but back then it was called NLP, to really come to the forefront on how banks used AI to help comply with sort of regulatory change. I think in today's environment, obviously, things have shifted. We now go from traditional NLP, supervised NLP, to now generative AI. I think in there, you can process way more documents than just these financial contracts. You have a way wider range of documents that you can process: emails, market surveillance, et cetera. And I think the three things I think from a central banker perspective to be aware of as we're thinking about the banks that you regulate. Number one is, you're going to get a tremendous, much higher degree of transparency coming out of these banks because you can, right? AI has that ability to be everywhere. The second point is liquidity. So one thing we realized is that banks that used NLP to digitize documents and be able to package data in sort of, for example, say the secondary loan market, saw slightly higher prices because they were able to provide this data for due diligence purposes. And finally, cost. The cost of regulation for banks. I mean, a lot of banks complain. I was talking to the CIO of a GSIB just a couple days ago. He was saying how, they used to complain so much about regulatory burden of more and more regulation. Suddenly with AI, you can actually comply with regulation in a much cheaper fashion. And the final sort of point I'll say is this, right? I think there's a huge amount of thinking around sort of tokenization or smart contracts in financial assets. One really counterintuitive point is that now that AI can process human natural language in a more general way, I wonder, is there a sort of a tension between smart contracts and tokenization versus the fact that AI can just read human language? I think there's an interesting balance there. So that is to say, I think, some of these banks, you were using AI way before you may have thought. One cool fact I like to mention is that, of course, of Eigen, we from beginning to when I sold it last year, we processed over $100 trillion worth of financial contracts and exposure. A lot of that are derivatives, but I thought it was a pretty cool statement. But that's sort of hopefully some of the thinking, just going a little bit deeper into data collection for sort of regulatory compliance for banks.
Well, thank you very much, Lewis. I think this really, epitomizes the fact that private financial institutions were using machine learning, artificial intelligence well before many other use cases. So in a way, we are going over some very familiar ground. But as you point out, if you combine this with tokenization, this actually really opens up new possibilities as well. So I'm going to go to the second round, and maybe we can be a little bit quicker on this round. Want to discuss the role of governance and governance frameworks, and how do we implement some of the safeguards that we've already mentioned. And I'm going to start with you again, Peter.
Thanks. Well, as a few speakers have already mentioned, the stakes are uniquely high for central banks at the moment. We've got these disruptive technologies that we're trying to apply while we're safeguarding the public interest, financial stability, operating critical infrastructure. And so the governance frameworks that we put in place need to be incredibly robust, because we do need to get the balance right between innovating and between caution and public accountability. So for us, the first thing we've put in place is a series of guardrails, basic guardrails. As Hyun mentioned, we know that these models are probabilistic, they're not factual, so there are risks of hallucination, of ethical questions, and of course of cyber risks as well. And so we've been very careful to put in place boundaries for all of our staff to tell them where the AI can be used, what it can do, and how they need to go about validating the outputs from those AI tools, because especially in those sensitive areas like policy and financial oversight. We also follow the Australian government's ethical AI guidelines, and we make sure that we have safe places for experimentation to take place, so that if we do start getting some rogue results, they're not going to do any harm. We can fail safely. Second thing you need to do, of course, is just get some structures in place. So for us, we've chosen to put in place two key committees. We have an AI committee that's made up of senior staff, and they're responsible really for the strategic oversight of all of our AI initiatives. They think about whether those initiatives are aligned with our corporate goals, with our strategic goals. They look at whether they fit within our risk appetite, and make sure that they also fit in with our resourcing structures, because that's a problem obviously with all central banks. The second group we have is an AI advisory and assurance group. It's made up of experts that are drawn from all areas of the bank, and they really assess the various AI initiatives that come up and think about whether they are technically feasible to do, whether they meet our whether they're sound and secure, and whether they meet our ethical requirements and comply with our other regulations. But structures are one thing. Probably the more important area is people. So you have to invest heavily in making sure that your AI literacy is high throughout the institution. And we've been putting in place a lot of training programs for all of our staff. We have a major initiative called Prompting for Productivity, where we train everybody to get good prompts and the pitfalls of prompting AI tools and improving the output. But we also are acutely aware that the leaders need to be understanding of how AI works. Otherwise, how can they govern the rest of us? So there've been a lot of training inputs there. We've had a lot of thought leaders come from academia and from other areas who've talked to the leaders and explained to them the opportunities and the pitfalls, really to get a good sense of how all that works. And the final area I think that you need to have in place within your governance framework revolves around the data itself. These tools are only as good as the data that goes into them, and so you've got to make sure that you've got trusted, well-governed data. We spend a lot of time and effort valuing our data and making sure that we've built systems of knowledge management that we can put in place. And that, I think, puts us in a very good stead going forward. So I'll leave it there.
Very good, very good. Thank you, Peter. I think this is, all 3 points are really important. I think, as central banks, we have a especially important responsibility in this. And as you say, it's easy to fall into magical thinking with AI. You think that this will just do its work, whatever. But the data is absolutely key. And I think the importance of the leadership, I think, is also very important. It's not something that just happens in your IT department. This is very much something that has to flow through the organization. Hatice, can I turn to you? I read with great interest your annual report, which really the details of the governance framework. And given your first intervention, I'm sure that this is something that you've also given a lot of thought to.
Yes, thank you. So to be mindful of our time, I'm going to just mention the risks and challenges we face here. So risk number 1 is about transparency and accountability. As Pablo wonderfully mentioned in his insightful speech, advanced AI models often operate as black boxes. Yes, there are some efforts for making AI more explainable, but it is still difficult to communicate how specific outputs are generated. And this lack of transparency raises accountability concerns. For example, who to blame if AI misfires? The coder, the model, or the central banker? What I mean is that delegating judgment to AI risks undermining human accountability, which is central to monetary authority. And risk number 2 for us is a critical one, as everyone recognizes, over-reliance on automation. As everyone knows, there is this hallucination problem, but if hallucination is not a bug, rather a feature of AI. And also there is this bias risk and the so-called over-alignment risk, meaning AI's tendency to please people. It can be sometimes quite manipulative indeed. So that's why, as policymakers, we maintain our skepticism toward fully automated processes powered by AI agents. Also, studies show that AI is particularly good at narrowly defined tasks. And this is another limitation considering the multidimensional needs of central banking. And thirdly, ethical and privacy considerations, as mentioned before, because central banks increasingly rely on sensitive data sets. And that's why protecting data is fundamental to sustain trust. So AI is not fully trustworthy yet, especially in an area like central banking, which bears huge responsibilities. That's why we have to take specific actions, measures, and ironically, human capital is needed to play a key role here. So in AI projects, for AI projects in central banks should be accompanied by human oversight, judgment, and output verification. And this means that the first and the most important thing to do for central banks is investing in human capital, aligning human capital with AI's benefits and risks. And in this framework, I believe a measured adoption seems to be the ideal approach for AI transition. And all this actually brings us to the governance issue, not only within our own central banks, but globally. We do need a framework to protect the integrity of AI use in money and regulation. Maybe just as Basel sought to protect the integrity of the financial system, we need a Basel-like framework for AI use in financial systems. I guess it's always inspiring to be in Basel. Yeah.
Excellent.
And as central bankers, we must lead by example in setting responsible AI standards and collaborate to ensure that AI systems serve the public interest. So if one asks me whether AI is becoming a fait accompli in central banking, I would say no. Yes, AI is a wonderful tool for informed decision making, but it cannot sideline the essential role of human judgment, which is central, or which truly matters in central banking.
Absolutely. Thank you very much, Hatice. Rashad, speaking of global governance, how are you envisaging the G20 task force?
Yeah, I guess G20 coming out of my ear, so I run the risk of talking more about G20 and AI. I guess, when we were preparing for the G20, there were two kind of narratives around AI. The one is, which is core to the G20, and that is the global growth discussion. What are the consequences of the unintended consequences of one country growing at the expense of the other, and so on. So one of the things we try to elevate at the G20 is, how does AI square up with the global growth challenges that we face? And I guess when we were preparing for the agenda, many of our colleagues in the African continent, the central banks we talked to, were very worried about the lag in productivity, the inability to use AI as easily as their counterparts in the developed countries. So that was, one angle. Now, to the extent that what the G20 does with this kind of thing, is a larger debate about what the function and purpose of the G20 is. The second part, obviously, is the work of the FSB, the Financial Stability Board, which is a product of the G20. And I suppose what we were asking ourselves is, what the G20 does is a few things. It can do, one of the outcomes which happened during the financial crisis or COVID is it transfers resources from rich to poor countries. That's the G20 at its best, but very difficult to achieve. I think that there are other more heroic, under the radar gains that the G20 could make, and that is setting of standards, elevating something to the global agenda in the way that it harmonization of regulation. So I guess that's the area where we think the G20 has done work as an outcome of all the other areas in the financial, in the financial sector. Now, the G20 issues have been flagged since 2019 in various countries. What we hope to get out of our presidency is really sharing of information. Really, it sounds very trite, but I think that, for example, the FSB is releasing a document very soon on how do countries adopt AI. Ultimately, what happens is, how do you as a national capital take what you gain from the G20 debate and apply it to your country? Whether we're not being ambitious enough, or whether our successes next year, no names mentioned, will be more ambitious in terms of taking further the AI agenda by way of common standards rules is something to be seen. I realize we're running out of time, so let me end there. Yeah.
Thank you very much, Rashad. And if I can just advertise the BIS report that's going to be submitted
Of
as
course,
well.
The BIS and the World Bank report. Sorry about that.
And we have a report on the public policy use cases for AI, and it's building on the report from last year, and it's going to be out in October. So I would very much like to sort of, wave that as well. Thank you very much, Rashad. So Lewis, having heard all of this, what advice do you have for central banks in particular, but more generally for policymakers?
So it's interesting, right? So pre-generative AI, I think most of the banks have had a framework already for machine learning, which is called model risk management, right? And one of the biggest concerns I've had, and I spoke to about half the model risk management teams across the GSIBs, so half the GSIBs I've spoken with, and they're very concerned that generative AI fundamentally breaks their traditional model risk management framework, right? What is a traditional model MRM framework, right? We know exactly the inputs that goes into a machine learning model, and then we can validate the outputs, and in some forms be able to process this in a completely automated fashion without humans. Now, this is very useful for things like you can exclude things like race data or gender data to make certain credit decisions or mortgage decisions, et cetera. But in the world of generative AI, this falls apart completely because, as we're saying, it's a black box. For example, a recent study that came out that generative AI models, 40% of its information comes from Reddit. 40% comes from Reddit. I mean, like, you're going to trust that to make credit decisions? You're going to trust that for consumers to interact with their banks? So I think when I think about this, it is pretty scary. It is a pretty scary moment in time where this is such a powerful technology that you have to use because it is the future. But on the other hand, the input of this is a complete black box, right? And the output of this is, to your point, hallucinations is a feature, not a bug. It is, LLMs are basically a massive compression algorithm of the internet, mostly 40% of Reddit. and so I sort of have been thinking about this problem a lot and have talked to a lot of MRM officers. And I think there's sort of three things I would say. Number one is be extremely diligent and tight on provenance, where that information came from. And there are many different techniques now, like there's RAG plus, sort of agent retrieval mechanisms to get the provenance of your answers, and you'd be able to get that watertight. That's number one. Number two is that I think the traditional cross-fold validation for traditional machine learning models need to be updated to some kind of like AI agent valuation models. This is a very open piece of open research that I think a lot of people are thinking about, especially because agentic output can be subjective, not just sort of objective in nature. And then finally, the mathematics and explainability behind how these LLMs work, that's a rapidly evolving area. I think we are at the cusp of being able to probe certain things. I think understanding that will help explainability as well. So those are some of the three key areas I'm much looking forward to in terms of how we can evolve our MRM frameworks as sort of finance practitioners, sort of to the next era in AI.
Thank you very much, Louis. I'm taking a few lessons from this. First of all, these are powerful models, but we should not be falling into magical thinking. You cannot sort of extract more than there is in the data. I think for central banks, we have to think about the public policy use cases, in particular for nowcasting, for the oversight of payment systems, AML, et cetera, as well as central banks as institutions, as any corporate CEO would actually be using. And I think, Louis, central banks are actually just following in the footsteps of what private sector institutions have already been doing. But I think the use cases are much broader. And some of you are going to stay for the Agora committee meeting, and we'll have a lot more to discuss at those sessions as well. So let me thank the panelists. I think we're out of time, but Henry, you're going to make up for that time, aren't you? Go ahead.